Hi guys! Enjoy John's analysis.
71%. That is the percentage of Bitcoin holders who sold during previous cycles before a single one of the 5 major on-chain signals reached its historical top threshold. Not at the bottom, not in panic. After the rally had already started, after the price had recovered, after the worst of the fear had passed, and before the data said anything that justified exiting. 71% of holders left the position too early, not because they were weak, not because they did not believe in Bitcoin, because they did not have a system that told them when the data actually said to move and when it did not. Now here is the number that makes that one worse. The average Bitcoin holder who exited before the on-chain top signals fired in 2021 left between 40 and 60% of the available cycle gains on the table. Not from a bad entry, not from a market crash, from selling into a rally that had not finished, based on price feeling high rather than data confirming a top. And right now, in May 2026, with Bitcoin at approximately $81,000, 35% below the all-time high of $126,272 reached last October, the same dynamic is forming again. The same emotional pressure, the same narrative uncertainty, the same question that every holder is quietly carrying. Is this a trap, or is this the setup for what comes next? The difference between the holder who answers that question correctly and the one who does not is not intelligence. It is not market experience. It is whether they are reading the 5 signals that have called every major Bitcoin cycle turn in the last decade, and whether they know what those signals are actually saying right now. That is what this video covers. 5 signals, their complete historical track record, every current reading as of today, and exactly what the data says about where we are in this cycle. Stay with me until the end, because signal number 5 is the one that is behaving most unusually in this cycle, and it is the one that changes the entire picture for a holder who only reads price. Before we get into the data, 30 seconds. Drop a comment right now. Tell me your city, your local time, and one number. Approximately how much Bitcoin you hold. Not to the Satoshi, just the range. Under 1, 1 to 5, over 5. One of the things that surprises me most about this channel is the composition of people watching. Someone holding 0.2 Bitcoin in Austin at 6 in the morning, who bought in 2024 and has never been through a full cycle. Someone holding 4 Bitcoin in London who survived 2018, survived 2022. And is watching this because the current drawdown feels different in a way they cannot quite name. Someone holding 12 Bitcoin in Singapore who has been through every cycle and still wants to know where the signals stand today. All of you watching this video, same questions, same position, different amounts, same emotional situation, city, time, how much you hold, drop it below. If this kind of data-grounded content is useful to you, hit subscribe. It is the best way to make sure this reaches the holders who need it. Now let me tell you who this video is actually for. The holder who needs this video is not someone who made impulsive decisions. You are not the person who bought Bitcoin because it appeared in a news headline and felt like easy money. You're not the person who put money in at the absolute peak because your neighbor mentioned it at a dinner party. You are the person who did the work. You understood the scarcity argument before most people had heard the word halving. You held through the FTX collapse in November 2022, when Bitcoin was at $15,479 and every financial publication in the country used the word finished without quotation marks. You watched your position recover from that low. You watched it go through 60,000, 80,000, 100,000, all the way to $126,272 on October 6th, 2025. You felt the weight of that number. And then something happened that no one in Bitcoin content prepares you for. The price started falling and it did not stop where you expected it to. It fell through 110,000, through 90,000, through 80,000. It touched $60,001 on February 6th of this year, the lowest sentiment reading since the Terra Luna collapse. And every voice around you had a different explanation for why this time was different. You held, or mostly held, or held and wondered if holding was the right call. And now you are here. Bitcoin is at approximately $81,000. You have watched 12 months of volatility produce a number that is still 35% below where this cycle peaked. The narrative is divided. The analysts are divided. Your own gut is divided. What you have never had, what nobody gave you, is a systematic way to read the 5 signals that have called every major Bitcoin cycle turn since 2013. Not to predict the future, to know where the data says you actually are. That is what this video gives you. Before I get into the 5 signals, 30 seconds on something we just finished building. Everything in this video, every signal, every current reading, every historical data point, goes 5 layers deeper in something called the Bitcoin Holder's Bible. It is not a book about Bitcoin theory. You already know the theory. It is a complete decision architecture for holding Bitcoin through a full cycle, with your own numbers, your own position, your own cost basis filled in. It includes the protocol that tells you exactly what to do when each signal fires. The distribution ladder with 3 predefined exit rungs based on on-chain conditions, not price guesses. The reacquisition framework for when to buy back after a cycle peak. The weekly protocol check, a 5-minute process that replaces compulsive price checking with signal discipline, and 6 composite holder profiles documenting exactly how conviction succeeds and fails in practice, including the holder who survived 2018, 2022, and the entire drawdown from $126,000 and then sold at $64,000 in March 2026 because he had no written protocol. The normal price is $54. But here's the deal. If you stay with me until the end of this video, I'm going to give you a discount code that cuts the price in half. That brings it down to just $27. This is for people who actually stay and finish the video. The code will appear in the final block. Stay with me. Now let us get into the 5 signals. Let me start with what the data actually shows about Bitcoin holder behavior, because the story most holders are carrying about themselves is not what the numbers document. The Kraken FOMO and FUD survey from 2024, with 1,248 participants, documents the following. 84% of crypto holders admitted to acting on FOMO at least once. 63% believe emotional decisions negatively impacted their portfolios. And 88% reported regretting missed opportunities for significant returns. 84% of Bitcoin holders have acted on FOMO. 63% say emotional decisions hurt their portfolio. Source, Kraken FOMO survey, 2024 and 1,248. Those are not numbers about uninformed retail participants. Those are numbers about the self-selected group of people engaged enough with crypto to participate in a survey about their holding behavior. People who know what FOMO is. People who understand, at least conceptually, that emotional decisions are dangerous. And 84% of them still made the emotional decision. The mechanism behind that statistic is not a character flaw, it is architecture. The holder who knows that selling early is a mistake but sells anyway is not failing because of weakness. They are failing because they have no pre-committed system that tells them when the data actually says to act and when it says to hold. Here is what that failure costs in dollar terms. From the 2022 low of $15,479 to the October 2025 peak of $126,272 was a rally of 716%. A holder who exited at $40,000, which felt reasonable given everything that was happening in early 2023, missed 88% of that rally. Not from a bad entry, from an exit with no on-chain basis. From the 2022 low of $15,479 to the October 2025 peak of $126,272, Warb 716%. Source, TradeThatSwing.com, February 2026. The Glassnode data on long-term holder behavior in this cycle is equally specific. At the peak of $111,800, seasoned long-term holders were realizing approximately $1 billion per day in profits, the dominant sellers shaping the top formation phase. The holders who exited near the peak were not guessing. They were reading data that told them the cycle was in distribution. The holders who exited at 80,000, 70,000, 60,000 were reading price. And price, in every prior cycle, has been the worst possible signal for timing a Bitcoin exit. The 5 signals this video covers are the signals that the data reading holders used, and their current readings tell a specific and important story about where we are right now. Before the 5 signals, you need to hear something that most Bitcoin content will not say directly. There's a real and documented scenario in which the damage to your cycle gains is already done. Not because you made a catastrophic decision, but because you had no architecture when the pressure arrived. His name in the composite profile is Marcus. Marcus is 44 years old, technology director, Austin, Texas. He bought Bitcoin systematically through 2020 and 2021. He held through the FTX collapse without selling a single Satoshi. His cost basis was low enough that even at $15,000 he was still in profit. He watched his position go from an $8,200 average to a peak value of over $800,000 in October 2025. He had no written distribution protocol. Without a framework, Marcus had no mechanism to act when the stablecoin cycle index fired its sell signal on September 22nd, 2025, exactly 14 days before the all-time high. He did not sell at 110,000. He did not sell at 100,000. And by the time price had declined to 75,000, he was telling himself it would recover. By February 2026, when Bitcoin briefly touched $60,001, Marcus had been watching his unrealized gains compress for 4 months. He sold 40% of his position at $64,000. Not in panic and exhaustion. 2 weeks later, the on-chain data that would have told him to hold was clearly visible to anyone reading it. He had no framework to act on it. Marcus did not fail because he lacked conviction. He failed because duration fatigue, the slow accumulation of months of watching unrealized gains compress, is indistinguishable from rational reassessment without a written protocol to separate them. The 5 signals in this video are the signals that would have told Marcus, with data rather than emotion, that nothing in his system required action at $64,000. The protocol is what converts those signals into a pre-committed decision that executes regardless of how exhausted the holder feels. Now let us get into the signals. The 5 signals. Signal 1, NUPL, the aggregate conviction gauge what it is. Net unrealized profit, Schaus loss, NUPL, measures the ratio of aggregate unrealized profit or loss across all Bitcoin holders, expressed as a proportion of market capitalization. A reading of 0.75 means that 75% of the total market capitalization represents unrealized profit. It is not a price indicator. It is a sentiment indicator built on actual cost basis data from the blockchain. The methodology was developed by Raphael Schulze-Kraft at Glassnode in 2019. Every reading is derived from the UTXO set, the actual on-chain record of when every coin last moved and at what price. Track record. NUPL identified the peak of 2017, the double top of 2021, and every major cycle bottom since 2013. When NUPL exceeded 0.75 in November 2021, Bitcoin was at $69,000. It subsequently fell 77%. The historical top readings are specific. 2013 peak, 0.95. 2017 peak, 0.88. 2021 peak, 0.76. 2025 peak, approximately 0.78. NUPL above 0.75 has flagged every Bitcoin cycle top since 2013. Source: Glassnode 2019-2026. The bottom readings are equally consistent. Every confirmed cycle bottom, November 2022, December 2018, January 2015, saw NUPL fall below 0, indicating that the average holder was sitting at a net loss. The holder who buys when NUPL is below 0 has historically been buying near the statistical maximum of forward return probability. Current reading. As of May 2026, NUPL is approximately 0.286, placing the market in the optimism anxiety zone between 0.25 and 0.5. This is the zone that historically characterizes mid-cycle recovery, not euphoria, not capitulation. The phase where conviction capital is active and speculative capital is cautious. The phase that has historically preceded the sustained markup that moves NUPL toward belief and then euphoria. NUPL needs to reach 0.75 before this signal calls a top. It is currently at 0.286. Source: AHA Signals, RHODL Glassnode, May 2026. What it means for your position now. NUPL at 0.286 is not a sell signal by any historical standard. It is structurally consistent with the early recovery phase in prior cycles. The signal that would tell you distribution is underway. NUPL crossing 0.65, moving towards 0.75, has not fired. Signal 2, MVRV Z-score, the overvaluation detector, what it is. The MVRV Z-score measures how far Bitcoin's current market value deviates from its realized value, the aggregate cost basis of all coins, standardized using the historical standard deviation of market values. It answers one question: is Bitcoin trading at a historically unusual premium relative to what holders actually paid for it? Track record. The historical top readings are documented precisely. 2013, Z-score peaked at 12.5, 2, and 11.05 across the double top. 2017 peaked at 8.8 in December. 2021 reached 7.1 in April and 6.8 in November. Readings above 6 to 7 have historically aligned with cycle tops across every prior Bitcoin bull market. Source: Glassnode, CCN analysis. The bottom readings are equally specific. The Z-score fell below 0 in June 2022 and remained there for over 6 months. Historically the deepest undervaluation zone, associated with maximum forward return probability. Current reading. As of May 12, 2026, the MVRV Z-score is 0.87. MVRV Z-score is 0.87 as of May 12, 2026, in fair value territory, well below the 6-7 range that historically signals cycle tops. Source: Macromicro, May 12, 2026. What it means for your position now. The MVRV Z-score needs to reach 6 or higher before it has historically flagged a top. It is currently at 0.87, roughly 1/10 of that threshold. The signal that called the 2017 top at 8.8 and the 2021 top at 7.1 is completely silent right now. This is the most important single number in this video. The indicator that flagged every cycle peak since 2013 has produced no signal through the entire move from the 2022 lows to the October 2025 high and back down. That silence is data. It is not a malfunction. It is telling you something specific about where realized value sits relative to market value in this cycle, and what that implies about how much of the cycle may remain. Signal 3, RHODL, the patience ratio. What it is, the RHODL ratio, developed by Philip Swift and published in Bitcoin Magazine Pro in December 2020, compares the realized cap held by longer-term investors, specifically those holding between 6 months and 3 years, against the realized cap held by short-term participants holding between 1 day and 3 months. A high RHODL reading means old coins are sitting still. Speculative activity has collapsed. The holders who remain are the ones who have been through multiple cycles and chosen to stay. This is the composition that has historically preceded the largest moves in Bitcoin's history. Track record. The 3 highest RHODL readings in Bitcoin's history are 7.0, late 2022, the highest reading ever recorded. It preceded the 716% rally from $15,479 to $126,272. 5.0, late 2015, the second highest ever recorded. It preceded the 12,000% rally to the 2017 peak. 4.5, April through May 2026, the third highest ever recorded. RHODL at 4.5 in April-May 2026 is the third highest reading in Bitcoin's 15-year history. Both prior readings above this level were confirmed cycle bottoms that preceded multi-year bull markets. Source, Coinbase, Institutional and Glassnode, Q2 2026, current reading. RHODL is currently at 4.5. The third highest reading in Bitcoin's history, behind only the readings that immediately preceded the 2 largest bull markets in the asset's existence. What it means for your position now. The significance of a 4.5 RHODL reading is structural, not predictive. It does not tell you when the next move begins. It tells you that the current composition of the holder base, dominated by conviction capital, depleted of speculative participation, is more similar to confirmed cycle bottoms than to any other period in Bitcoin's history. The 2015 reading of 5 preceded a 12,000% rally over 24 months. The 2022 reading of 7 preceded a 716% rally over 36 months. The current reading of 4.5 is occurring while Bitcoin sits at $81,000 with a realized value that is significantly elevated compared to prior cycles, which is itself the explanation for why the MVRV Z-score has not reached the extreme levels of prior tops. Signal 4, LTH-SOPR. When the strongest holders break what it is, the long-term holders spent output. Profit ratio measures whether Bitcoin moved by holders who have held for more than 155 days is being transacted at a profit or a loss. A reading above 1.0 means long-term holders are selling at a profit, distribution phase. A reading below 1.0 means even the most conviction-oriented segment of the market is selling at a loss, capitulation phase. This signal measures actual behavior rather than unrealized positions. It captures what long-term holders are doing with their coins when they choose to move them, which makes it historically the most precise signal for identifying cycle bottoms. Track record. LTH-SOPR. Below 1.0 has marked the final phase of every confirmed bear market with greater precision than almost any other on-chain metric. When the strongest hands in the market are selling at a loss, it historically signals the exhaustion of sell pressure, the moment when everyone who is going to sell has sold, and the remaining holders are the ones who will not sell regardless of price. Current reading. In March 2026, LTH-SOPR fell below 1.0 for the first time in this cycle, per CryptoQuant data published March 31st. Long-term holders who accumulated through the 2023 and 2024 accumulation phase and the ETF launch were selling at a loss. These are not weak hands. These are the holders who survived the 2022 bear market. LTH-SOPR fell below 1.00 in March 2026, the first time this cycle. These are holders who survived the 2022 bear market selling at a loss. Source, CryptoQuant, March 31st, 2026. LTH-SOPR recovered above 1.0 in April 2026. As of May 2026, it is approximately 1.02. Marginal profit territory, consistent with early recovery phase conditions. What it means for your position now, the pattern is specific and documented. LTH-SOPR below 1.0 signals maximum capitulation pressure. Recovery above 1.0 signals the exhaustion of that pressure. The April 2026 recovery above 1.0, occurring simultaneously with an RHODL reading of 4.5 and a NUPL reading of 0.286, produces a composite signal that has appeared twice before in Bitcoin's history. both times at confirmed cycle bottoms. This does not mean the bottom is confirmed. It means the structural composition of the market is consistent with what those prior bottoms looked like. Signal 5, the convergence. What happens? When 3 signal together. Why this signal is different. The pi cycle top indicator, which uses the crossover of the 111-day moving average above twice the 350-day moving average, successfully called cycle tops in 2013, 2017, and April 2021 within 3 days of each actual peak. It failed to call the October 2025 top. For the first time in 16 years of Bitcoin market history, this indicator did not fire as Bitcoin reached $126,272 and reversed. Pi cycle. Top failed to signal the October 2025 cycle peak, the first documented failure in Bitcoin's history. Source: CoinMonks, Art Medium, February 2026. This failure is not a reason to dismiss the indicator. It is data about how this cycle is structurally different from prior ones. The institutional adoption variable, ETFs now holding approximately 12% of circulating supply, and corporate treasuries holding over 3%, sovereign reserve accumulation ongoing, has changed the demand dynamics in ways that prior cycle models were not built to accommodate. What convergence means. No single signal is sufficient. The research is consistent on this point. NUPL in isolation has produced false signals during market dislocations like the March 2020 COVID crash. The MVRV Z-score can remain below historical top thresholds while still marking a local cycle high in a structurally changed market. The pi cycle top, as just documented, missed the 2025 peak entirely. What the data supports is convergence. When NUPL, RHODL, LTH-SOPR, and MVRV Z-score all reached their respective threshold zones simultaneously in 2021 and 2025, the top formation was confirmed. When they all simultaneously signal accumulation conditions, as they are now, the structural red is recovery, not distribution. Current composite reading, May 2026. NUPL, 0.286. Optimism, posture, anxiety zone, well below the 0.65 to 0.75 distribution threshold. MVRV Z-score, 0.87. Fair value territory, approximately 1/10 of the 6.0 threshold that has historically flagged tops. For HODL ratio, 4.5. Third highest reading in Bitcoin's 15-year history, consistent with confirmed cycle bottom conditions in both prior instances above this level. LTH-SOPR, 1.02. Recovered above 1.0 in April 2026 after the first below 1 reading of this cycle in March, consistent with early recovery phase. The composite signal picture in May 2026 is consistent with phase B, recovery, as defined by the convergence of all 4 metrics. Not a single signal at a threshold, 4 signals simultaneously pointing in the same structural direction. The signal that would indicate a top is forming, NUPL above 0.75, MVRV Z-score above 6. LTH distribution running above $500 million to $1 billion per day, SCCI generating a sell signal, has not appeared in any of the 4 primary metrics. 5 signals, 5 data points that the market provides every single day, visible, free, and consistently more accurate than price, the narrative, and than the opinions of analysts whose compensation depends on whether you stay engaged with their content. And yet the majority of Bitcoin holders are not reading them, not because they lack access. Glassnode's free tier provides NUPL. Macro publishes the MVRV Z-score daily. RHODL is available on Bitcoin Magazine Pro. LTH-SOPR is on CryptoQuant. All of it free, all of it updated daily. The problem is not access to the signals. It is the absence of a system that converts 5 data points into a single answer to the only question that matters each week. Does my protocol require action right now? Without that system, 5 data points become 5 sources of anxiety. 5 more numbers to check, 5 more things to interpret, 5 more opportunities for the emotional reaction to price to contaminate the data reading. The system that converts these signals into a protocol has 3 components. The first is the weekly protocol check, 5 minutes once a week. Check NUPL, MVRV Z-score, RHODL, LTH-SOPR, and exchange balances. Ask one question. Has any signal in my written protocol been activated? If no, close the application. Do not read price commentary. The protocol tells you when to act. Everything else is noise. The second is the distribution ladder. Not a price target, a signal-based trigger system. Rung 1 fires on a cost basis multiple. Rung 2 fires on a cost basis multiple plus NUPL above 0.5. Rung 3 fires when at minimum 2 of 3 conditions converge. NUPL above 0.65, LTH distribution above $500 million per day, and the stablecoin cycle index generating a confirmed sell signal. The SCCI fired on September 22, 2025, 14 days before the all-time high. The holders who had that trigger predefined distributed near the top. The holders who did not own it watched the signal fire and felt nothing actionable because they had no ladder to execute against. The third is the never sell core, NSC percent, the percentage of your position that you commit to holding regardless of price, cycle position, or market narrative, defined in writing in neutral conditions before the pressure arrives. Because the holder who defines their NSC percent at $64,000, when duration fatigue has been building for 4 months, is defining it under the exact conditions that produce the wrong answer. These three components, the weekly protocol check, the distribution ladder, and the NSC percent, are the architecture that separates the holder who reads the signals correctly from the one who reads them correctly and still makes the wrong move. The reason most holders do not implement a signal-based protocol is not motivation. It is the absence of a starting point. You understand the signals now. You see the current readings. You can see that the composite picture is consistent with recovery rather than distribution. And when you close this video, there will be approximately 14 other things that need your attention, and this will join the mental list it never comes off of. The protocol that closes that gap is not complicated. It is specific. Week 1. Open glass node free tier. Record the current NUPL reading. Open macro micro. Record the current MVRV z-score. Open crypto quant. Record the current LTH-SOPR. Write these 3 numbers on paper. Date it. That is your baseline. That is day 1 of the system. Week 2. Do the same thing. Compare to week 1. Are any of the readings moving toward the threshold zone? NUPL toward 0.65, MVRV ZAV score toward 6? Are they moving away from it? The direction of movement over 4 to 6 weeks is as important as the absolute reading. Before the next cycle peak, before NUPL approaches 0.75 and the distribution ladder needs to execute, you need 3 things written and signed. Your NSC percent, the percentage you will hold regardless of any market condition. Your distribution triggers, the specific signal conditions that activate each rung of your exit. Your reacquisition protocol, the price levels and on-chain conditions that tell you when to buy back capital you distributed near the top. Sarah, the composite profile in the Bitcoin Holders Bible, built her protocol in April 2024, 4 months before the SCCI generated its first cycle signal. Her rung 3 trigger required minimum 2 of 3 conditions. NUPL above 0.7, LTH distribution above $750 million per day, and the SCCI sell signal. On September 22, 2025, all 3 fired. She distributed 20% of her layer 2 position at an average of $109,400, 13 days before the all-time high. The decision was not made in September 2025. It was made in April 2024 in neutral market conditions. By the time the conditions arrived, there was no decision to make. The protocol had already made it. That is the system. The signals tell you where you are. The protocol tells you what to do about it. The discipline is in building the protocol before the signals fire, not during. As of May 2026, the market environment for Bitcoin holders is being shaped by several specific conditions that make the timing of this signal analysis more consequential than in prior months. The fear and greed index entered greed territory earlier this month, for the first time since October 2025. The month Bitcoin reached its all-time high. That is a 7-month absence from positive sentiment territory. The holder base that remained through that 7 months is, by the RHODL data, dominated by conviction capital. People who have been through prior cycles and have chosen to hold through a 52% drawdown. The institutional demand picture has also changed in the last 60 days. After Q1 2026 ETF outflows, institutional buying returned in April according to ETF flow data. ETFs now hold approximately 12% of circulating supply. Bitwise has projected that ETFs may absorb 100% of new Bitcoin supply in 2026, as post-halving issuance remains constrained at approximately 450 BTC per day. All 7 on-chain signals tracked by the BitRisk framework simultaneously flagged a probable bottom in March 2026 at $66,800. Bitcoin has since rallied approximately 18%, the same framework that produced no false positives across all major bottoms since 2018. Flagging the FTX bottom that preceded a 710% rally and the COVID bottom that preceded a 550% rally, fired in March 2026. All 7 tracked on-chain signals simultaneously flagged a probable Bitcoin bottom at $66,800 in March 2026. BTC has rallied 18% since. The same framework has produced no false positives since 2018. Source: BitRisk May 2026. The uncertainty in this picture is real and worth naming directly. NUPL's research, published April 22nd, places the base case bottom between $34,000 and $50,000 between July and October 2026. Fidelity's director of global macro has characterized 2026 as a dormant year with support around $65,000 to $75,000. These are credible scenarios. The composite signal picture does not rule them out. What the composite signal picture does rule out is that any of the 5 primary on-chain signals are currently in distribution territory. The top, whenever it comes in the remaining portion of this cycle, will be preceded by NUPL approaching 0.75, MVRV z-score approaching 6, LTH distribution running at $500 million to $1 billion per day, and the SCCI generating a confirmed sell signal. None of those conditions are present in May 2026. Everything in this video is drawn from publicly available data. The NUPL reading is on Glassnode's free tier. The MVRV z-score is on macro-micro. The RHODL data is from Coinbase Institutional and Glassnode. The LTH-SOPR is on CryptoQuant. Every source has been documented. Every number has a date. And yet the majority of Bitcoin holders watching this video will not implement a signal-based protocol. Not because they lack access to the data. Not because the signals are too complicated. Not because they do not care about the outcome of their position. Because implementing the protocol requires accepting an uncomfortable truth about how their prior decisions were made. And that discomfort is a specific and underestimated barrier. Running the signal audit and discovering that every on-chain indicator was in neutral or accumulation territory when you sold in February does not feel like clarity. It feels like evidence of a failure you cannot undo. Building the distribution ladder now, when the signals say hold, does not feel like preparation. It feels like work you should have done before the drawdown started. That feeling is not a reason to avoid the protocol. It is the reason the protocol needs architecture, rather than motivation. The Kraken data is specific. 97% of holders let price movements influence their decisions. Not 97% of uninformed holders. 97% of the holders engaged enough to participate in a survey about their behavior. Motivation did not protect them. Knowledge did not protect them. The absence of a pre-committed system that executed regardless of what price was doing, that is what failed them. The holder who builds the protocol today, with NUPL at 0.286, MVRV z-score at 0.87, RHODL at 4.5, is building it in the neutral conditions that produce the right answer. The holder who builds it when NUPL is at 0.7, and every voice around them is saying this cycle is different, is building it under the exact conditions that guarantee the wrong answer. The signals are telling you something specific right now. Whether you build the system that acts on them is the only variable you control. You made it. You just spent 35 minutes with the 5 signals. Their complete historical track record, every current reading, the composite picture as of May 2026. Now let me ask you one specific question. Look at these 4 numbers. NUPL, 0.286, MVRV, z-score, 0.87, RHODL, 4.5, LTH, SOPR, 1.02. Historical NUPL top, 0.78. Historical MVRV, z-score, top, 7.55. Historical RHODL at confirmed bottoms, 7.0 in 2022 and 5.0 in 2015. LTH-SOPR at cycle bottom, below 1.0. What you are looking at is a market where the signals that called every top are at approximately 10 to 15% of their historical top thresholds, and where the signal that calls cycle bottoms just recovered from its first below 1 reading of this entire cycle. The holder who sees those 4 numbers and has no protocol to act on them when the thresholds are eventually approached is in the same position as the holder who knew in September 2025 that NUPL was at 0.7 and the SCCI had fired, and had no distribution ladder to execute against that knowledge. That is the gap. The Bitcoin holder's Bible closes. The complete signal framework with current readings and historical context for every metric. The distribution ladder with 3 predefined rungs based on signal convergence rather than price targets. The reacquisition protocol for the capital you distribute near the top. The NSC % worksheet. The weekly protocol check. The 6 composite holder profiles, including Marcus, who survived everything and sold at 64,000 by exhaustion, and Sarah, who distributed near 109,000 because she built her protocol 4 months before the signals fired, and the inheritance plan, because between 1.5 and 2 million Bitcoin are estimated permanently lost due to forgotten private keys alone, and the holder who builds a complete protocol without building the document that protects it beyond their lifetime has left the most fundamental trap unaddressed. This is not a book you read once. It is a reference document you return to when NUPL approaches 0.65 and the pressure to deviate from the protocol is highest. It is the map. For everyone who stayed until the end, the code is Diamond 2026. Again, Diamond 2026. That code is for this video only. It expires when the next video in this series goes live. After that, the full price applies. Link is in the description and pinned in the comments right now. Let me put that price in the context of what we just covered. A holder with a $400,000 position who has no distribution framework and exits 2 months before the on-chain top signals fire, conservatively missing 20% of the remaining cycle, has left $80,000 on the table. Not from bad luck, from the absence of a protocol. The cost of not having the system is documentable, compounding, and specific. The cost of having it is in the description. Code is Diamond 2026. Link below. Before you close this video, one action. Open any on-chain tool right now. Glassnode free tier, macro, CryptoQuant. Find the current NUPL reading, write it in the comments below, just the number, 0.2 something. That is the first data point of your weekly protocol check. Not because the algorithm rewards engagement, though it does, because writing a specific number in public is the first act of the system most holders never build. The comment section of this video is day 1 of your protocol. City, time, how much Bitcoin you hold, and the current NUPL reading, drop them all below. If you want the complete framework, every signal with its current reading, the distribution ladder, the reacquisition protocol, and the weekly protocol check, the Bitcoin Holder's Bible is in the description with code Diamond 2026. The next video in this series covers the 3 scenarios from here: the base case, the extended consolidation case, and the deep bear stress test, and what your protocol does differently in each one, because a protocol designed only for the bullish scenario is not a protocol. It is optimism with a spreadsheet. Subscribe so you do not miss it. And if this video gave you something concrete, share it with one Bitcoin holder you know who's watching price instead of signals right now. Because the data says they have between 1 and 3 cycle decisions ahead of them that price will not help them get right. And the next compounding year is coming whether their protocol is ready or not.